great to be back with you. We have a very special guest with us today. One of the privileges that I have in broadcasting is I get to share with you unique individuals and services that I think are going to absolutely enrich your life and give you the financial freedom that we all need to be patriots who are truly free, who no longer depend on corporate globalist systems or services that enforce their woke values down our throats. So what if I told you that you can actually pay off your mortgage in total in just 5 to 7 years on your current income? Would that not be a game changer for you and your family and your financial independence? Well, my guest today is Michael Lush. Michael's the founder of Replace Your Mortgage. And as you'll find out, he is a very, very passionate person about giving you that path, that patriot path to freedom, independence, by giving you the tools that you need to pay off that mortgage in just a few years. So, Michael, it's great to have you here. Thank you so much for being with us.
Yeah, thanks for having me. It's an honor.
It's my honor. Also, we have today my ornery business partner, Ralph Cochran. Ralph is president of Turley Talks LLC, and Ralph is actually a client of Michael's. So Ralph is going to be giving us his perspective as well on this wonderful service. So Ralph, thank you for being with us as well.
Yeah, thank you.
All right, so Michael, why don't you give us a bit of your backstory on how you made this very impressive discovery that really redefines how we pay for homes?
Yeah, and I just want to be 100% transparent on the front end. I didn't discover the strategy. The strategy's been around for hundreds of years. But how I discovered it, ironically, was from a hedge fund manager. So right out of college, I got into banking and I got into lending. And it was after the meltdown, the same company called me back and said, hey, we're going to start back up and we want you to be director of operations. And they had got their money from a hedge fund to start back up. And that hedge fund manager's family lived in Nashville. So he would fly, I would imagine, private, on a private jet. And he's a hedge fund manager, so we got to start a hedge fund. But anyways, he would fly on a private jet to Nashville, and he would stop off at my office to kind of mentor me. And he would do this a couple times a quarter and just kind of sit down, run through numbers and whatnot. And I took the privilege of asking him on one of his visits and said, look, I want to get kind of in your pockets. I want to get in your sphere of influence. And I want to offer mortgages to the people that are in your sphere of influence, because I would imagine if they're doing mortgages, they're big mortgages, and big mortgages are big paychecks. And somewhat directly, you own this company, so we'll be scratching each other's backs. And he said, well, that's all well and good, but my sphere of influence don't do mortgages. I said, well, let me guess, you probably pay cash for everything. He said, no, we always use other people's money. We just don't use mortgages. Mortgages are archaic and they're the least inefficient way to sell or to offer financing. And it was funny because he made a comment that has stuck with me and it will stick with me for the rest of my life. He said, Michael, I get that you're passionate about what you do and you like what you do, but I'm just going to be honest with you. Offering mortgages is selling financial crack to middle America. He said, what we do is we offer home equity lines of credit. That's what we consume. And that's what we utilize because it's far more efficient. And everything I'd been trained to taught in the lending and banking industry was that HELOC was like a credit card on your home. You don't want one. And he took 15 minutes and just brushed over it and said, here's how we utilize it. And here's how it works to our advantage. So he explained it to me. And he literally only spent 15 minutes. Well, I spent the next year trying to prove him wrong, because that didn't sit well with me. Here I am, a mortgage professional, reached the heights in the mortgage industry, had a prominent job with a publicly traded company at the time. And I was like, it just doesn't feel good that I'm selling financial crack to middle America. I don't want to be the dope dealer. So I tried to convince him that it was wrong. And I hired a CPA, an actuary, and we dove into the numbers. And actually my now business partner, I hired him to also dive into the numbers. Like, we've got to figure out a more efficient way to use a mortgage. And the more we got to looking at it, we're like, wow, we can't dispute this. This is absolutely 100% correct. So in 2012, I actually converted my mortgage into a first lien position home equity line of credit. And in about 3.5 years, I paid my home off. And it was in 2014, I had another mentor that convinced me that what I know I should offer to other people and educate other people on it. And that's how Replace Your Mortgage came to be. So we started it late in 2014, and now we've grown to about 5,500 clients and counting. And our goal, hopefully, is to get so much market share that we can convince the majority of, not a majority of Americans, but at least 10% of Americans that there is a better alternative out there. This isn't for everybody. So I want to be clear with that. This isn't for someone who's living paycheck to paycheck. But for folks that are cash flow positive, have decent credit, and a little bit of equity in their home, there's nothing that competes against this. And again, this isn't something that's new. Actually, this is older. This philosophy and strategy is older than the modern day mortgage. And in a little bit, I hope I can share the history of how mortgages came to be.
Well, you just led into my next question.
Oh, sweet.
Because I think one of the coolest things that we cover often, one of the big themes that comes back on this broadcast, is this phenomenon that's going on all over the world called retraditionalization. It's one of my favorite words to say. This is where populations are going back. They're returning to the way we used to do things before the rise of this modernist globalist age, like classical education, for example. And it sounds like that is precisely what you're doing, what you're advocating for. So, you know, you're in effect saying, let's get back to pre-1913 methods of payment that are just as viable and advantageous today as they've always been. So can you walk us, give us a little bit of a history lesson? See, look, we are totally simpatico here, right? Give us a little history lesson of how we used to pay for homes. And then did I get that date right? Is it right around 1913 and the Fed and all that?
It is
and
precisely.
How things changed.
It's precisely the Fed. And it wouldn't surprise me if you've got a book in the background that is The Creature of Jekyll Island. Have you heard of that book or read that book?
I have not.
Okay.
I have not, but I have heard of it. Yeah.
Yes, it's an amazing book. And some people look at it that are not astute to this type of, they look at it as a conspiracy theory, but it's not. It's actually a history lesson of how the Fed came to be. So prior to 1913, a mortgage was a two-way instrument. Money could move in and out freely. And it was especially popular with farmers because farmers could say, okay, I need to buy equipment. So I have a $100,000 balance on my farm that's valued at $200,000. I need $10,000 to buy equipment. So they literally changed the deed the same day. You got your 10 grand. We changed the deed to 110. You go sell your crops. When you get the revenue from your crops, you deposit it back in and we'll reduce it down to whatever the revenue of the crops were. Let's say 15 grand. Now you owe 95 versus the 110. So back then, a HELOC was extremely liquid. However, what changed was exactly what you said was in 1913, the Fed was created. And that's why that book is so popular. And so it's very intriguing because the Fed was created by a banker. And can you guess who the banker was? J.P. Morgan.
Oh, Morgan. I was going to say Rockefeller.
J.P. Morgan.
I was thinking Rockefeller.
Yeah, so J.P. Morgan. So he owned an island off the coast of Georgia called Jekyll Island. He had a private meeting there. So he had some politicians and some other wealthy folks at the time. In fact, they were so wealthy, those 6 individuals comprised of 1/4 of the world's GDP. That's how wealthy they were. And they came up with a business plan that is the Federal Reserve. So here's what the Federal Reserve did to change banking forever. They are the backstop to banks, and they allow banks to execute on something that is extremely powerful for banks. It's called fractional reserve lending. What that means is for every dollar you put in a bank account, they can lend 10 out. Now, some of them have different regulations that can lend $15 out. So think about it. You give a bank 10,000, they can lend out 100,000. You give them 100,000, they can lend out a million. So they don't have to have complete reserves on what they're lending out on. It's fractional reserve lending. So the banks got together and said, wow, this is extremely powerful. So we need to figure out a way to separate the American people from their cash because most people were putting their cash into their mortgages. So that's what they did. They changed the mortgage. They made it a one-way street instead of a two-way street. So just like on a mortgage, you wouldn't put 100% of your income into a mortgage. Why? Because when it's time to pay your bills, it's not liquid. You can't pull it out. The only way you can pull it out is go get a home equity line of credit. That's what we're talking about today. 2, refinance, which is very costly. Or 3, sell your home. Well, none of those are attractive. So instead of putting your money into a mortgage, you may pay extra towards your mortgage, but you'll never put all of your money towards your mortgage. Well, where are you going to leave the rest behind? It's called segregation of income. You're going to leave the remaining money behind, not under the mattress. You're going to leave it in the bank account, in a checking account, because that's what banks really want to do. They want to grow core deposits because the more deposits they have, the more they can lend out. It's called velocity banking. So by segregating the income, they separate you from your cash so that you only put some of your money towards a debt and you leave the rest behind to pay your bills into their hands, where they're gladly accepting it as deposits. Now, what is the result to a consumer? Well, you pay on the debt longer, much longer, hence the 30-year mortgage. That's where it came to be. So what I'm talking about is not something new. It's something older than the modern day 30-year mortgage. So most people think that they did this because they wanted consumers to pay more interest. And yes, they did, but that wasn't the ultimate goal. The ultimate goal was to drive up core deposits. The benefit of that was now you're in debt longer, so you pay more interest. Where with a home equity line of credit, it's a two-way street. It's just as liquid as a checking account. So like, for instance, in Australia, they call it a money merge account. Why do they call it a money merge account? Because it merges two products into one. It's your real estate loan and your checking account. So in Australia, over 80% of citizens, this is what they do. In South Africa, this is what they do. In other countries, this is what they do. Why don't we do it in America? Well, we're the greatest economy that's ever been. We can afford to be ripped off. And that's exactly what's happening. We're being ripped off.
Yeah. Wow. Give us just a snapshot. That was brilliant. Thank you for that. Give us a snapshot, if you would, maybe some bullet points. I mean, you have firsthand knowledge of mortgages. You've obviously defected from your 15 years working with mortgages. What are the key differences between a HELOC and a mortgage approach to paying off a home?
Number one is the fact that a HELOC is liquid. So it's a two-way street. Money can move in and out freely. So if you wanted to put 10 grand towards your HELOC today, well, guess how much you have access to today? The 10 grand that you put down, right? So what that does to the consumers, it gives them confidence to do that in the first place. So 98% of folks with mortgages don't pay extra because in times of need, they don't have access to it unless they refinance. Where with a HELOC, they have access and they're liquid to those funds anytime they need it for either opportunities or times that they need to survive. So one, it changes the behavior and the mental thinking of the consumer that I can now put all of my income into this loan product because I know it's liquid and anytime I need it, I can pull it back out. So that's number one, is that it can go in and come out freely. Number two is it's a simple interest loan. So for instance, let's say you have a $100,000 balance on a HELOC. Well, it's calculated, daily interest is calculated. It's called per diem, right? So if it was 4.25% at 100,000, you're paying like $11 per day in interest. Well, if you put 10,000 of your income into the HELOC, the interest recalculates automatically every single day for free. And now you're paying interest on 90 grand until you need to use those funds. What, 90 grand? Now you're like $9 of per diem versus 11. It may sound like a small number, but if you add all those days up for months on end, it's, for a $250,000 mortgage, you could save $150,000 of interest.
Wow.
It's
so
powerful.
This is very different than of just upping my monthly mortgage payments, for example, just to eat away at the principal. This is a fundamentally different way of actually approaching the mortgage.
Correct. This is a cash flow strategy. It is not a payment strategy. So you have to treat your HELOC just like it's a checking account. So you're really not changing a whole lot about your behaviors. You're just changing where your cash flows. So instead of your cash flowing towards a payment extra on a mortgage and then some into your checking account, and then you pay your car and all that out of your checking account, everything goes into your HELOC and then you pay your bills out of your HELOC. So it's not a payment strategy. It's a cash flow strategy.
Right. Wow. Fascinating. Ralph, obviously you're immersed in everything we do here, all things Turley Talks and our new Patriot Path to Freedom. And so how does Michael's service relate to, in your mind, economic nationalism and the importance of patriot independence?
Yeah, I mean, Steve, if you think even about your own story, which I'll let you tell, but just and my own story of how do we break free and just be financially independent. And that empowerment allows us to have what we call optionality, right? Like you have all these different options you can choose from, and then you have to get more educated to choose what's the best option for your personal goals, your family's goals, your legacy goals, your church's goals, whatever you're invested into and what comports with your values. And so I know for what we're doing, we're very excited about this, both on the personal level. I mean, I'm personally in Michael's program, going through it right now, and I can't wait to get this in place. And I am looking out forward to teaching my children entrepreneurship. And also it's going to help me even in funding whole life insurance policies and do what he calls velocity banking, which is like his advanced level stuff, which gets like crazy. And there's, you can use that to be basically, you no longer even need the bank anymore. And so for what I'm seeing is it's true financial independence. So I'm no longer like, I don't like Wells Fargo Bank at all. I don't like most of the big banks. I can tell a story about Wells Fargo, but I'll just
Bank of America.
Yeah, Bank of America, that one too.
Yeah, right.
Yeah. Right. So I mean, it's just you think of what they did with I think wasn't it Bank of America that hurt Trump
after Jan 6.
Yeah. So just lots of different games like that. Imagine if like PayPal or Shopify like shut you down. That would be crazy if that would ever happen, right? Just theoretically, that's never happened to us. Yes, it has. But so these are things that are just going on, and this cancel culture is just ridiculous. And for the economic nationalism, we as conservatives, we as conservative patriots, we need to be thinking outside the box, and we have to wake up. We have to take action. A patriot has courage. We take action. We move forward. We don't sit back. We don't suck our thumbs and be, wallowing in the despair because, oh, Trump's not in office anymore. No, we pick up and move forward. And that's what I think one of the big things everyone on here can do, like I'm doing. And we're going to be moving forward as a movement. We're going to move forward and help build. And that's what we need to do. We need to be like Nehemiah in the scriptures, right? We have the sword in one hand and we have the trowel in one hand. We're building and fighting at the same time. And that's what I think. And this is, I think, a key part of that, because if you can have that financial independence, you don't have that anchor in the back of you. And then also, I know for me, I used to work for AT&T when I was younger, and they were just then bringing in a lot of the wokeness, pre-wokeness kind of stuff, diversity. And I used to like get out of these trainings, and even this is early on, and I can't even imagine working in a corporation like that now. And I have friends who are in those environments. And so these are tools, and like, it's an education. You have to go back and re-educate yourself on, okay, how do I become an entrepreneur? What does that look like? I mean, Steve, you can speak to this yourself, right? There was, when we first met, like that was part of your journey of what does it mean to become this whole entrepreneur thing? And I even remember when we went to that ClickFunnels conference and you were like surrounded by all these entrepreneurs, what that was like. But does that make sense?
Oh, absolutely. Yeah. I mean, that hanging out with entrepreneurs changed my life. I was like, wow, they have just a whole different mindset, a different way of thinking about life. And I once heard it put, an employee will walk into a store or restaurant and say, well, I wonder how much that cook makes, or I wonder how much that waiter makes. It's like an entrepreneur walks into a restaurant or a store and says, I wonder what the margins are like here. They just have a completely different mindset. What's the cash flow in this place, and that's all a lot of people I think just need is, we're not taught entrepreneurial mindsets. We're getting our jobs at 16 and 17, or even the pressures of going to college generally to get immersed in the professions, as it were, where we get accredited through a college degree and then we get put into the corporate world that colleges are inextricably linked to today. So absolutely.
Well, I think we're constantly indoctrinated with problems, right? So if you look at mainstream media, they're not, publicizing what solutions are. They're publicizing what problems are and what's wrong with America today. Where entrepreneurs, we always look for a solution. We don't care what the problem is. We'll look at the problem, analyze the problem, and figure out how to move forward in a different direction. But we're constantly focused on what is the solution. And the brain is no different than any other muscle in your body. It's got to be trained, and it's got to be conditioned. And to be conditioned as an eternal optimist, I feel like I'm an eternal optimist. And with inside of my company, I'm like, man, we're going to be a $200 million company in no time flat. And they're like, oh, hold your horses, slow down. It's because I'm constantly thinking, if we just solve this problem, then here's where we are. And I think that's what this does, is we solve a huge problem in America today, which is we're getting ripped off. And we're being bled through our cash and through our retirement and through our savings. And we're paying needless interest to banks that we don't have to. And we're completely doing it voluntarily. We don't have to do that. All we have to do, success leaves clues. So just like I learned this from someone successful, hey, I'm sharing it to the mainstream Americans. I'm not trying to share this with the ultra wealthy because they're already doing this. I can't convince them to do this. They're already doing it. So I'm trying to reach the other half of the population and help those folks out.
Yeah, after all, you learned it from a hedge fund manager. They've got it all taken care of. It's the rest of us, right? The rest of us fools that get what I particularly struck by as we bring this to a close, I'm absolutely struck by the fact that you went back, you returned, you're not. This wasn't so much an innovation, like this was. Or instead of discovery, I should say, a rediscovery of something that was there, that was the norm for centuries, that got eclipsed by sort of this robber baron globalism. And now it's able to come back to patriots who care deeply about freedom. It's really an impressive.
Rediscovering the lost tools of banking.
I love it. I love it. Yeah, right.
Book.
What is it? So Doug Wilson wrote the book Rediscovering the Lost Tools of Learning for Classical Education. This is Rediscovering the Lost Tools of Banking, or the lost tools of not, you can't even say mortgage anymore, right? For people who don't know, Michael, what does the term mortgage mean?
It is Old French for death pledge. Yeah, and we sign up for it daily.
I love it. Anything with mort,
right?
It's bad news. That's for sure.
Yeah, and I get the question all the time is if banks have the ability to offer a product that allows consumers to pay this little interest, then why aren't they telling consumers? And you talk about education, and Ralph, you've talked about education and learning. Well, who's in charge of our education, and who's really teaching us? Well, the banks are. They're funding the colleges. You think they're going to educate us on a tool that pays them the least amount of profits? Absolutely not.
Wow.
Yeah, 30 years to 5 to 7. Yeah, I doubt it.
I had a question, Michael. Do you have any stories of people like have gone through your program that kind of started out like just the normal middle-class person, and now they're like investors, or maybe they're even still in their calling? I think one point I want to make too, just because I was talking about entrepreneurship, that doesn't mean everyone needs to kind of stop working for an employer. I'm just more talking about the entrepreneurial mindset. So you have options. You can always go in different directions. But I'm curious if you have any kind of your favorite stories of some of your people that kind of fires you up and kind of keeps you going at this.
Yes. I mean, we have hundreds. If you go to our website, we have testimonials. If you go to our YouTube channel, Replace Your Mortgage, we have testimonials. But there's definitely one that stands out among the rest because I work closely with him. He's a part of Replace Your Mortgage. So he was a high school principal, and he was convinced to do this from, check this out, his mortgage broker. So his mortgage broker stumbled upon this, and actually he had met me down in Florida, and I kind of explained what I was doing. We were at a mortgage conference, and I said, no, this is what I do personally. So he went back and told Edmund, I'm usually your mortgage guy, but I'm also your best friend. I don't think you should do this. Here's what I think you should do. So it took Edmund a lot of convincing, and he was a high school principal having a decent salary. And Edmund went from being a high school principal with inside of a year, he jumped on board, became a client, utilized the Heloc appropriately, also utilized all of our other education where he got into real estate investing and so forth. And now he's a full-time consultant for Replace Your Mortgage, makes a much better living. He earns 3 to 4 times what he was making as a high school principal working with Replace Your Mortgage, and also utilizing the strategies taught with inside of Replace Your Mortgage to become a real estate investor. So, I mean, inside of a year, Edmund, not just paying off the house, because it depends on the life cycle that you're in. Some folks, if you're 57, 65, and hey, you just want to be debt free and ride off in the sunset, no problem. That's not Edmund. He's still in his late 30s. So Edmund understood the power of utilizing other people's money, just like hedge fund managers do, right? So he utilizes Heloc to invest in real estate. So now he's done dozens of flips. He's got rental properties. So he could pay his home off anytime he wants, but he's constantly re-leveraging the liquid home equity line of credit to his advantage, not the bank's advantage, to make him and his family money as opposed to the bank money.
Amazing.
Yeah, that's good. We're gonna have to retrain our mic. Heloc, not mortgage. Heloc. I think
Right.
I think we need hats like that. So the Heloc, not mortgage.
Or replace your mortgage.
Replace your mortgage. Exactly it. Yeah. Yeah.
Now we
and
just
that's
need replace your banker.
or replace your banker. And it's so neat because, if you're thinking, how do you pay off your mortgage in 5 to 7 years at your current income level? Answer, get rid of it. You get rid of the mortgage and you replace it with Heloc. It's just, it's a game changer. It's just absolutely fantastic. Well, we're going to have a sign-up sheet actually at the end of this that you can be a part of, a sign-up sheet or sign-up place, I should say. So you can be a part of what Michael is doing. And I got to tell you, Michael, this is, again, I really think this is a game changer. I can't thank you enough for your work. It's really amazing. And I think you're impacting more lives than you can imagine. So thanks so much for being with us.
Thank you. Thanks for the time. Appreciate it, guys.
Thanks everyone for watching. Like me, you may be having a bit of a revelation about how you've been using your money to pay off your mortgage all these years. Well, I got some good news. Next week, I'll be taking you through the exact steps you need to free your family from the federal banking system with Michael Lush, exclusively for Turley Talks members. If you want more information and want to be the first ones to know about the special approach to your mortgage, get your name on the list now at turleytalks.com/replace your mortgage. That's turleytalks.com/replace your mortgage.